Hi students. So let we continue with the cash flow statement preparation. We know the basic format. Now let we understand how to identify the missing information while preparing the cash flow statement. Now let we take the Excel sheet help. Okay. Now you're able to see the Excel sheet. What are the major missing information that you can identify? Number one is missing information calculation. Okay. So mostly sometimes missing of depreciation charged in the current year. How to calculate? You can prepare a small T format, small T format account. What is that? Accumulated depreciation account. Accumulated depreciation account. This is a liability account because this is a provision account. Accumulated depreciation or provision for depreciation, one and the same. Okay. So since it is a liability account, okay, opening balance will be on the credit side, closing balance on the debit side. Understand? Because any liability account, opening balance will be on the credit side and closing balance will be on the debit side. Okay. Once you take opening balance, closing balance, then any asset disposed in the current year, accumulated depreciation on the disposed asset should be reversed, should be removed. Otherwise, when the asset is disposed of, accumulated depreciation on that asset you should eliminate from the books of accounts. So that you need to debit. Okay. So disposal asset accumulated depreciation. Disposal asset accumulated depreciation, that you reverse it, remove it. Disposal asset accumulated depreciation. Then whatever the closing balance you can find, whatever the closing balance you find in the credit side. Okay. So you have the opening balance, you have the closing balance, you have reversed the accumulated depreciation on the disposed asset. Then you can find, okay, some balance on the credit side, some balance on the credit side. That balance is called as a depreciation charge in the P&L account. Okay. Depreciation charge to URL account. So this is a balancing figure. This is what? Balancing figure. Okay. Are you clear? This is what? The balancing figure. This balancing figure will be taken to, this balancing figure will be taken to the PRL account. Okay. Not PRL account, basically net cash flow from operating. So this value should be taken to, we added to, okay, profit before tax while calculating the cash generated from. Are you clear? That is number one. Number two, sometimes interest paid, they don't give you. You need to calculate. But one thing you need to keep in mind, okay, that interest given, interest expenditure is given in the P&L account, but there is nothing given in the balance sheet about the opening balance or closing balance. In such case, whatever the interest that is given in the P&L account is deemed as paid. Okay. So please make a note. Okay. Interest expenses given in PRL account, but nothing is provided about interest payable in balance sheet, then the amount of interest expenditure given in PRL account is deemed as paid in the current year. Okay, is it clear to you? Nothing is given in the balance sheet. Whatever the amount of interest expenditure given in the P&L account is deemed as paid in the current year. But okay, if the interest expenditure is given in PRL account as well as certain balances of interest payable given in balance sheet. Suppose interest expenditure as per PRL account is suppose say 4,500 in the balance sheet. Okay, interest payable is given as 4,500. Okay, 44 8,200 per 2021 and mm, and 10,200 per 2022. If it is given like that, if it is given like that, okay, then how we are going to prepare the T account. So let me copy the format. Let me copy the format. So what is the format? The account format you can prepare. So remove the account. As payable account. So this is also liability account. Okay. This is also liability account. Hence, opening balance will be credit. Okay. So opening balance means 2021 is opening balance. How much it is? 8,200. Very good. Then closing balance. Closing balance is like what is called as 2022. That is 10,200. Then interest given as per P&L account. Interest expenditure as per PRL account. How much is given to you? Interest expense P&L account of 4,500. Now you can find out how much will be the interest paid. So the total on the credit side is coming to 12,700. So 12,700, you bring the other side to balance the account. Then find the balancing figure. So that is called as debit side. Interest paid is the balancing figure. So how much it is? How much it is? 12,700 minus 10,200. How much it is? In the Excel sheet, you can do like this is equal to 12,700 minus 10,200. How much it is? 2,500. This is what is called as interest paid. So this goes to the, it's a balancing figure. So this goes to the, this figure. Okay. This figure goes to the, okay, operating activities. Are you clear? Are you clear? Okay. That is one. Similar like this is the tax also. Now let me explain that one also. Okay. Tax also sometimes you need to prepare, most of the case you need to prepare T account. Okay. So similar to the interest. Okay. Tax expenses given in PRL account, PRL account, but nothing is given in the balance sheet about, okay, interest tax payable. Nothing is given in balance sheet of tax payable. Okay, in such case, the tax expenditure is deemed as paid in the current year. That is what simple. Tax expense given in the P&L account, but nothing is given in the balance sheet about tax payable. In such case, the tax expenditure is deemed as paid in the current year. Okay. However, if the tax expenses also given, okay, as 6,500 and the tax expenses in P&L account, tax expenses in PRL account given as 6,500 and the balance sheet also contains tax payable balances such as opening balance 2021, okay, opening balance 2021 for say 12,000 and closing balance 2022, okay, 15,000, okay. Then what is tax paid? Then what is the tax paid current year? Again, you have to prepare similar to the tax payable account, okay, the what is called as a interest payable account, tax payable account you have to prepare. Okay. Now let me similar to the, so you have to prepare small t account again, because accounting students are always advisable to prepare the account format. That is easy. Understand it. Okay. Tax payable account. So t account. Um, okay. Opening balance. Opening balance, how much is given to you? 6,500. Okay. That is as of the last year. Closing balance. How much is given closing balance? Okay. So opening balance is 12,000. Sorry. 12,000. Closing balance is 15,000. And the tax expense as per P&L account that you have to credit it. Tax expenses as per PRL account. How much is given to you? 6,500. So 6,500 you take. on the credit side. Okay, then the missing information on the debit side is deemed as, okay, so 18,500 on the total. Okay, then bring the total to the other side, 18,500. Then there is a 3,500 is the balancing figure. 3,500 is the balance. So this is what is called as tax paid in cash. Tax paid in cash. Okay, this is balancing. This goes where again to the cash from operations to calculate net cash flow from operating activities. Okay, so balance figure take to, okay, operating activities. Okay, so we have identified how to calculate the interest paid, how to calculate the tax paid. Another important account is called as non-current assets. Most of the cases, they don't give the non-current assets purchase particularly. Okay, how to identify the, how to calculate the non-current assets purchase during the current year. So for this also, you can prepare a T account. You can prepare what? T account. So when you prepare the T account, then you'll understand easily. So what should be taken on the debit side of the T account? What should be taken on the credit side of the T account? You must have a clarity. Once you have a clarity, it is very easy. So this is what is called as a non-current assets account. Okay, it is net book value. Net book value, you have to take it. Okay, since non-current asset, current assets are, non-current assets are fixed assets. Okay, these fixed assets always opening balance will be on the debit side. Please understand. Opening balance on the debit side always. Okay, then closing balance will be on the credit side always. Please understand. Okay, then what you need to credit to the non-current asset account? Normally depreciation charged for the current year. So depreciation charged, okay, to PRL account in the current year. We can charge it to the P&L account in the current year. That you need to credit it. Please understand. Then what you're going to credit? The disposed asset, any non-current asset disposed in the current year. Okay, disposal asset, disposal asset. Okay, always you have to take net book value of the asset disposed. Always what you have to take? Net book value of the asset disposed. This I will write below. Always better to take what? Net book value of the asset disposed. Why? If you take the actual value of the disposal, if you take actual value of the disposal, sale value, that is called as what? Sale value, then you have to debit the profit or credit the loss on the sale of the asset. Instead of avoiding that one, okay, you can prepare like this. I'll show the alternative also by the side of it, how loss or gain on the asset, how it should be accounted in. Okay, disposal you have to take it. On the debit side, what will come? Any asset, any leased asset, okay, right of lease asset or right of use asset, whatever you call it as, okay, leased asset or right of use asset. Any leased asset acquired in the current year, that you have to, because that is not for cash. Then any assets revalued, revaluation reserve. When the assets have been revalued, the revaluation reserve also will increase the value of the asset, but that is not for the cash. Okay, then if there is any balancing figure is there, that balancing figure you can take it as the purchase of the asset for cash. That's what you need to understand. Let me take physical example, then you will easy for you to know. I will take one example here. So here you will find out some balancing figure. This is what is called as a purchase of asset. Asset for cash. Okay. This is also again balancing figure. Also again balancing. So this goes where? This goes to the second item, which is called as a cash flow from investing act. Now let you take some physical figures to make you to understand. Okay, suppose, okay, the net book value of non-current assets 2021, 2022, 2021. So non-current assets, non-current assets. So 2022 is 420,000. 2021 is 300,000. Okay, this is that is given in the balance sheet. Then apart from that, they also told very clearly in the current year the asset is evaluated by the asset is, okay, in the current year one part of the asset, one of the assets is revalued by 25,000. Okay, then during the year a part of the asset is disposed, okay, for 25,000 and made a profit of 5,000. We have been given what? Opening balance, closing balance. Okay, and in the current year, one of the asset is revalued, and during the year, a part of the asset is disposed. Okay, then also they are given during the year. Okay, an asset is acquired under lease for, okay, lease for how much? It is 15. Suppose if this information is given to you, okay, this particular information is from the balance sheet. This information they will provide in the additional information. Okay, note, some additional notes. So we are going to reflect these values. Now let me copy the format again. Okay, you copy the format. So what is the opening balance? Opening balance, how much it is? 300,000. Okay, closing balance, how much is given to you? 420,000. Take closing balance 420,000. Very good. Remove these X figures. X's are not required here because we'll replace the value. Okay, now depreciation charge in the current year. So how much they have given in the question? Okay, in the current year, the asset is revalued by, during the part of the asset is disposed of it, during the asset is acquired under lease, and depreciation charged in the account, which account for the current year is 10,000. Okay, so depreciation charge is given to you. How much it is? 10,000. You take it. Then asset is disposed in the current year. How much asset is disposed? In the current year, one of the asset is revalued 25,000, and during the year, a part of the asset is disposed for 25,000 and made a profit of 5,000. Disposed for 25,000 and made a profit of 5,000. So then what is the book value? book value is equal to 25,000 minus 5,000 is equal to 20,000. So disposed asset 20,000 is book value. 20,000 is book value. Are you clear? Okay, it is disposed for 25,000. That means you made a profit. Book value is 20,000. Made a profit on disposal 5,000. That means you sold for 25,000. That is what the understanding is. So we have taken the opening balance, we have taken the closing balance, we have taken the depreciation, we have taken the disposal asset. Okay, net book value. Okay, then any leased asset obtained in the current year? They said very clearly, during the year acquired a leased asset for 15,000. So take that one also. Then during the year, their asset revalued. Yeah, that is also given to you. The current year asset is revalued by 25,000. That also you take here. So leased asset we have taken. Okay. Then revaluation we have taken. Revaluation how much it is? 15,000. Leased asset is 15,000. Okay. Revaluation is 25,000. Revaluation is 25,000. Okay. So this is 25,000 revaluation. Are you clear? So we taken necessary information in the account. Opening balance we have taken, closing balance we have taken, depreciation we have taken on the credit side, disposal of the asset we have taken book value only, not the actual disposal value, actual sale value. Then leased asset we have taken, revaluation reserve we have taken. Now whatever the difference is there, that is the balancing value. So 420 plus 20, 440 plus 10, 450, 450,000. You bring the 150,000 on the debit side and the balancing figure. So how much it is? 340,000. 300 plus 15 plus 25 is equal to 340. So 450 minus 340 is equal to 110,000. This is what is the purchase of non-current asset. Purchase of non-current asset. This goes to the investing activity. So this to be taken to. Yeah. So non-current asset, very important. Okay, suppose you want to show actual disposal value. If you want to show the actual disposal value, what is the difference? So let me show here the difference. Okay, suppose disposal value, disposal asset, 25,000 we have to take it in case actual disposal value. So it is not net book value, it is the actual sale value of asset. In that case, you have to show profit on disposal, profit on 5,000 you have to show on the debit side. There's a loss you have to show on the credit side, profit you have to show on the debit side. Then what will be the total? Total will be slightly changing. Total will be how much it is? 455,000. 455,000. The same thing you have to take here, 455,000. But the 10,000 remains the same. 10,000 won't change. You can check it. So 300, 320, 345. Okay, 345. Okay, 455 minus 345 is equal to 110. So this amount won't change. But where is the change? Here is a change. So please observe. So where is the change? Here we have taken very clearly net book value of the disposal. Here we have taken actual disposal value. If you take actual disposal value, you have to show the profit or loss. In case of profit, you have to take on the debit side. Loss, you have to take on the credit side. Please remember. Okay. So that is what the difference that you need to observe. So we have taken the non-current asset. Then sometimes you may require to prepare what is called as a lease account also. Lease liability. Why? How much lease liability paid in the current year or any new lease obtained in the current year. Okay. So that is also liability account. Let me understand. Okay. So liability account. So format opening balance will be credit, closing balance will be debit. Okay. Let me prepare Okay, one more account, lease liability account. Lease liability account. Then opening balance, credit always. Why? Because liability account opening balance will be credit, closing balance will be debit. The credit. Okay, very good. Then what will come on the credit side? Any new lease obtained. Any new lease obtained. So new lease obtained in the current year. Current year. New lease obtained the current year. Okay. Liability of new, otherwise called as liability of the new lease. Liability of the new lease that you have to take. Okay. Then make the totals. Most of the cases. No other information will be there. Okay. Then whatever the balance is there, okay, on the debit side is called as lease liability paid. So this will be the balancing figure. Called as balancing figure. This lease liability paid, where you are going to take? To the financing activity. Take to financing activity. Very clear? Let me take with some numerical examples so that you will understand very clearly. Okay. Suppose in the balance sheet, the lease liability information. Sometimes they'll give you lease liability as a current liability, as a non-current liability. Understand? As a current liability and non-current liability. Both you have to take current liability opening balance, non-current liability opening balance. Then closing balance of the current liability, closing balance of non-current liability relating to lease. Okay. Now let me take some example to make it understand. Okay. In the balance sheet, the lease liability information, okay, is given like this. Okay. Current liability. Okay. Lease liability. 55,000. Then non-current liability, lease liability. Non-current liability. Lease liability. Okay. Suppose 40,000. That is it. Current liability, non-current liability. Okay. This for the 2021. Then, sorry, 2022. Then 2021. Okay. They given the closing balance as 20,000 and 30,000. Okay. Then in the current year, the company obtained a new lease. Okay. For 20,000 or 30,000. Okay. With this information, how we are going to prepare the account. Okay. Now, let me copy the same thing, and wherever it is relevant, we change the information. Okay. Is liability. Opening balance. Opening balance, you have a current liability, you have non-current liability. Opening balance, current liability as well as a non-current. Current liability, how much is given to you? Opening balance. Opening balance is last year. How much it is last year? 20,000. Current liability. Non-current liability. Non-current liability. How much is given to you? 30,000. Okay. Current liability not. And new lease obtained in the current year. New lease obtained in the current year. So how much new lease obtained in the current year? That is 30,000. Okay. Are you clear? Then what is the closing balance? Closing balance, you have to take both current as well as a non-current. Both you have to take. Understand? Okay. So closing balance, you have to take both current liability as well as non-current liability. So closing balance, current liability. Okay, current liability, how much is given to you? Closing balance, 25,000 current liability. Non-current liability, how much is given to you? Non-current liability, 40,000. Okay. Non-current liability. Both you have to take 40,000. Okay. So let me increase the font. Okay. Now what will be the balancing figure? So this side when you totally how much it is 60 plus, sorry, 30 plus 30, 60 plus 20, 80,000. So 80,000 you take this side. Then, so the total on the debit side is only 65,000. That means you have paid 15,000 is the balancing figure. 15,000 is the balance. That takes to the financing activity. Okay. So please make a note that in case lease can have opening both short term and long term. Okay. This is what regarding lease. And sometimes you may require to prepare what is called as the the government grants obtained the current year or government grants amortized in the current year. Okay, government grant is also a liability account because normally whenever the grant is received, it will be kept in a liability account and it will be transferred to the P&L account based on the terms and conditions satisfied. Okay, so how the government grant account look like? Okay, so government grant account. So government grant account can be prepared for identifying how much grant is received in the current year or how much grant is amortized in the current year. Are you clear? Anyway, whatever it may be, you can prepare for any purpose. You can prepare any of the purposes. Okay. So government grant account. This is basically to find out what government grant received or maybe government grant amortized. So opening balance on the credit side. Are you clear? Opening balance on the credit side. Then closing balance on the debit side. The debit side. Opening balance on the credit side, closing balance on the debit side. Any new grants already obtained, you are going to credit it. Okay, you are going to credit it. Okay, this is called as new grant. New grant obtained. Okay, you are going to credit it. Opening balance to that new grant. Then, but that should be equal to the closing balance. If the closing balance is something different, then what happens? Some amount of grant is amortized. Some amount of grant is amortized. Understand? So how amount will be? If the amount of grant amortized is given to you, then amount of grant received you can find. So any of these two figures can be balancing figures. Please understand. Any of these figures can be balancing figures. Okay. is called as grant grant amortized is in the current year. That will be the balancing figure. Balancing figure. Okay. So this amortized figure, grant amortized, that means this has been credited to P&L account. This has been credited to P&L account. This you have to take to the operating activity. Take to operating activity. Why? It's already created to P&L account. You have to adjust it by reducing from the operating activities when you prepare it. Suppose if it is given in the P&L account, then you have to identify the new grant obtained, new grant received, or cash received. Okay. So this where you need to understand different accounts, what you need to prepare. Okay. Depend upon the situation, there may be some more accounts also you may require to prepare, depend upon the situation. These are the most important. Okay. So let's look into from the beginning what we have understood. So missing information can be number one, depreciation. Okay, explain to you. Okay, number two, interest payable account. Okay, interest paid is missing. Tax paid can be missing. Then what is called as the non-current assets. That is purchase of non-current asset may be missing. Okay, that I have explained to you. Then lease liability, how much lease paid has been explained to you. Then government grant received or government grant amortized, how to calculate. If you have all this information, missing information, then 90% of the problem can be solved very easily. 90% of the problem can be solved very easily. So once you keep this missing information in mind, so when you read the problem from what is called as beginning, then you will understand very clearly what information is not there, what information you need to calculate. Okay. So then the most important thing is to prepare the cash flow. To prepare the cash flow require okay, what? 2 years balance sheet, number one. Okay, with additional information, or 2 years balance sheet with profit and loss, profit or loss account, not profit and loss, profit or loss account for the current year with additional information. So either this way or this way. 2 years balance sheet with the P&L account with additional information, or 2 years balance sheet with the additional information. You can prepare the cash flow statement. Are you clear? Okay. So once you have a clarity about this missing information, then in the lecture 3, what I will do, I will take hypothetical example with as many adjustments as possible to prepare the cash flow statement. Okay. So let you understand these key accounts, these formats, what is debit, what is credit, how to find the missing information. So that will help you if you understand which account shows which balance. Liabilities account shows credit balance opening, closing debit balance. Asset accounts shows opening balance debit, closing balance credit. Okay. So let me close this, and I will make the lecture 3 an hypothetical example, what is called an exam type example, which includes as many missing information to calculate. Then we can prepare the cash flow statement. Okay. Thank you. If you need any clarification, please call me. Thank you very much. I already given my number in the first lecture. Thank you very much.